Now, we talked about Wema Bank's 50 billion naira commercial paper program registration approved by the FMDQ OTC Securities. Let's bring in the treasurer of the bank, Mr. Kayode Bakare, to give us insight into the rationale behind this program that has been around for some time, but we just got the registration approved by the FMDQ OTC. Thank you very much for making it to the program this evening. So it's really good to have you.
Good evening.
Right.
It's my pleasure to be here.
Thank you so much, sir. So what is the motivation behind this commercial paper? A lot of banks, a lot of companies, most of the companies that are also listed on the stock exchange are beginning to float CP notes.
Well, since we're talking to a diverse audience, it will be interesting to explain what a CP really is. A commercial paper is an unsecured money market instrument issued in the form of a promissory note. They are short-tenor instruments, discountable instrument, issued largely by corporates to raise short-term finance. What we've seen lately is the fact that it's a lot cheaper than bank loan for corporates. I think sometimes last year the Nigerian bills came to the market to raise the CP at about 10, 11 thereabouts. Bank loan today is about towards the end of 2020, 28, 27, 20, 29. And for financial institutions, it's a lot cheaper as well, because for every 100 naira raised as a conventional deposit by banks, we have what called a CRR that has been sterilized by central bank, about 22.5 plus 5%, about 27.5. Meaning for every 100 naira you raise from the market, 27.5 naira out of it is being sterilized by central bank. So if you look at it, this is the cost of such funds. 80% cost of funds, by the time you factor in that CRR, it's quite expensive. So as part of the liquidity strategy, what you've seen lately is banks now approaching the market to raise CP, because for CPs, you don't charge CRR, and they sit on your balance sheet as other liabilities. So in terms of pricing, they're a lot cheaper, and they come in a little bit faster in terms of traction. So largely that explains why you see corporate and also banks, assessing the market for commercial paper.
Some people said it is because treasury bills are on the high side. Companies are looking to get more funding to be able to buy into it. Do you agree with that?
No, not necessarily. I mean, for the investors, it also provides alternative form of investment. It's whereby you're handling about extra 50-100 basis points increase over and above T-bills or the same benchmark. It's okay for money managers to invest in CP. But from the usual perspective, it's basically the usual pricing. I mean, if I can raise CP based on my grade, because you are meant to be rated as well by rating agency for you to accept that market. A lot of conditions are there under the FMDQ, I mean, commercial paper quotation rules. That as a bank or as an issuer, either corporate or bank, you need to meet those requirements. So based on your risk profile, it affects the pricing of your CP. And it's a lot cheaper, like I said. Basically, it's pricing.
Now, on the screen, you can see some of the companies and entities that have quoted commercial papers on the FMDQ OTC in recent times. I think the latest in the series was that of Access Bank, which also came on board a few months ago. But, Mr. Bakare, walk us through the level of awareness amongst the average investor in Nigeria. I know a lot of time the big boys like you tends to depend more on foreign investors who bring in the real fund. But in terms of domestic, the domestic market, what is the awareness like?
The awareness is pretty deep. Basically, you and I also need to invest in CP, and we also have what we call qualified investors, which are largely the pension funds administrator, trust managers, stock broking firm, money managers, and all those agents within that subsector of financial market. If you look at what has happened lately, most of the CP, most of the issues that have come to the market, most of the CP are fully subscribed. That tends to tell you that people are quite aware, especially when what you've seen lately, T-bills, yield on T-bills have sent a strong signal to people that the days of putting my money in banks as fixed deposit has gone, and that's created a lot of awareness for both the conventional customers of banks, as well as discerning investors who are looking to optimize the yield on the SS funds. So in terms of analysis, it's deep. And also importantly, because those CPs, they are quoted on the FMDQ OTC exchange. That's also provide liquidity. I.e., if I do buy from the primary market, I can also, in the course of the duration of the CP, I can sell if there's need to. So what that means is they can exist the market at any point in time. There's always liquidity. So that helps to drive the awareness in the market. And that's where you see a couple of institutions, corporates and banks coming to the market to assess the market for such under the platform of commercial papers.
So this commercial paper basically is there right now. You got approval for registration. How is this different from the other commercial papers that are already available on the platform of the FMDQ OTC?
Different in terms of
in terms of what exactly makes yours unique, because you haven't really taken any funding, you haven't really announced anything regarding the quotation on FMDQ OTC.
The difference between Wema Bank CP and what we're doing is we're launching a 25 billion CP program as part of our 50 billion program as approved by FMDQ.
Okay.
And we're losing in two series, 182 and 270 days. The difference largely is in terms of yields. I'm providing additional 25-50 basis points increase compared to T-bills and CPs or similar tenor in the market. In terms of T-bills, if you look at what we're offering to the market, we're looking at about 100 basis points, between 175 and 150 basis points increase compared to T-bills of same tenor. And for me, as an investor, three things are compelling for me as an investor. Number one, I don't want to lose money. And second, don't forget number one, i.e. I don't want to lose money. And the third is in terms of yields. And I'm saying, for you to qualify as an issuer to come to the market, there are basic requirements. Yeah. You have to be rated by 2 rating agencies. For Wema Bank, we'll be rated by 2 rating agencies, one local GCR, and the other one future rating. Okay. So what that means is that in terms of security, in terms of security of your funds.
All right, we'll need to continue this discussion after the break. Mr. Kayode Bakare is the treasurer from Wema Bank, and right here on the program, we'll continue the discussion after this break.